What's going on, guys, and welcome back to the Stock Advantage. My name is Darren, and today I'm going to talk about 5 stocks that you need to buy, or at least add into your watch list. So without further ado, let's jump right into it. All right, guys, so welcome back. So first off, we're going to do, I'm going to break down these 5 stocks, kind of what's going on with them and what I see going forward. So the first one is NNDM, or Nano Dimension. So if you don't know, they're a 3D printing company. They actually manufacture 3D printers. Their flagship is called the Dragonfly LDM. But they're not just any 3D printer. They do a process that's called additively manufactured electronics. Pretty much, they 3D print electric circuitry to make small chips, and goes in electronics, computers, all different kinds of applications. So the important thing about that is it gives manufacturers the ability to make prototypes rapidly without having to subcontract those out to another vendor. So it gives giant manufacturers a leg up and the ability to generate prototypes as well as small production runs. And their Dragonfly unit has worked really well so far, and they're working on some big contracts. They got really popular last year whenever ARK Invest bought a huge amount of their shares, and so ever since then they've been kind of going through the roof. So you can see over the last 1 year here that Nano Dimension's been going crazy, but specifically we'll zone in on the last few months. So they've got as high as almost $18 a share. And they have been notorious for the last 4 or 5 months of monthly direct offerings, which is what happened today. So last time this happened, it was, I think, January 14th. Their stock dropped 12-15% overnight. And then that's when I use it as a good buying opportunity. Bought in a few shares, and then it kind of stayed the same, and then it started that long progression up to $18 a share here. Ups and downs along the way. I think some of this was whenever the GameStop AMC started happening. People pulled their money out of this stock and a few others, and they started moving everything that way. You start to see that money flow back in. Again, a few ups and downs, but this is a rapid growing stock. So a lot of information, a lot of good stuff happening with this company. But they did another direct share offering actually this morning, and I think it was to the tune of $500 million. Yeah, $500 million worth. So they're using this as a way to put some funds into the company to invest back into it. And then also there's some notes on them looking at a potential acquiring a European company, probably to build some of these products overseas and have that market as well. So a lot of good stuff going on in Nano Dimension. Anything, this morning at pre-market, it got down to like 1340 or 1350, and I loaded up on some more shares. By the end of the day, it did get up to 1453, and then looking after market, it's up to 1485. My opinion on this is anything less than 1550 would still be a good buy, pretty much because this stock is set to double or more in the future. There's also some rumors out there that ARK's new space ETF, ARK-X, will potentially be buying some NNNDM to add to that portfolio, because what better avenue for that chip manufacturer or the 3D printer manufacturer as something related to the space exploration, them needing to create prototypes as well, and that industry for sure is going to want to be hush-hush on everything they create. So there are some rumors floating around about that, and so if that does come to fruition, the stock will just blow through the roof. So for me, this one is a buy and hold. It's a good position to have going forward. Take profits as you need to, but like I said, anything under 15 or 1550 is a buy on this one. Okay, next up, let's look at Lemonade, LMND. So they're actually an insurance holding company. They do home renters insurance as well as pet insurance. So they're just breaking into the market here. But they, in 2020, had reached 1 million active users, which it took Geico and State Farm well over 20 years to get to that mark. So their claim here is that they're fast. Everything's online based. It's AI based. You get quotes back within minutes. Claims are filed and completed within a few minutes. And so if you look at the generation that's coming and what people are going more for, they want the AI-based, the online-based companies that have lower overhead and those kind of things. And Lemonade is that disruptor potentially. And so if you look at this chart here, over the last month, they hit highs in the 182, 183 range here. And then they kind of had a fall from grace, and that happened because our buddies over at Citron put out a hate piece on it, so they can get some short sale money. And they basically said that they were out throwing their coverage, right? They weren't, the valuation they have, they couldn't live up to that, which is true in a sense, but at the same time, as I've talked about a few times, that's half the companies out there right now are out kicking their coverage on their valuation. So Lemonade is just part of that. Whoa, went a little crazy there. Ain't that funny? And so they're currently down about 14% from those highs of 183. And it actually this morning it's made a good run over the last few days. It got as low as about 140, 141. So that would have been a great opportunity to buy. But then it has started to recover, which is kind of what I was looking for. I was looking for that break where it showed some signs of recovery here. And I think that it's got a solid run going forward. It opened really well today, and then it finished down like about everything else in the market. But I think it's got a solid run back to the low to mid 170s. And then it could very, very easily get back to the 180s pretty soon. So you're looking at anywhere from an 8 to 14% opportunity with this one. And from a long-term perspective, they've got a lot of potential, but they do need to expand their insurance coverage. Right now, they just have 3 smaller sectors of home insurance, renter's insurance, and pet insurance. So if they can expand that into life insurance, into some of the bigger fields, then they can truly become a disruptor across the entire insurance sector. So definitely looking forward to what Lemonade has to offer going forward, but I do think at this point they are presenting good opportunity. I see a good uptrend the last few days, and I could see it easily getting to the 170, 175 mark in the next few days. So good opportunity to buy from my perspective. Okay, next up, let's talk about CleanSpark. So CleanSpark has been interesting. So if you go back and look over the last, what is it? Let's look, 6 months. They kind of came out of nowhere. Had some good run up here to max of about $43 a share. Got a little crazy, and then it started to fall back down, and we were all wondering how far it was going to fall. It did end up coming down into the about the low to mid 20s here, where it's found some support. And then it's rebounded again up to the $37 mark before taking another hit. And this recent hit was because they missed their earnings. So they're down 22% right now from their highs. But on a positive note, they did miss their earnings from the past. But they projected a very strong growth in fiscal year 21, and their sales continue to rise quarter over quarter. They've just got to button up the EPS side and making sure that their revenue is in line and they're profitable going forward, which is hard to do when a company is growing. They're investing back into themselves. But I see good potential here. I mean, even if you're just looking at it from a short-term perspective, I mean, $29 to $37, pretty good chance of getting back up there. I wouldn't straight buy it pre-market or anything like that. I would kind of see how it's going to play out because it did open very high today. It actually opened in the 30s, or it ran up nicely into the 30s today before again the whole market cooling back off and settling down at the 29.50 after hours pretty much. So this one here is a no-brainer buy. It's just looking for that good opportunity to buy into this stock. On a positive note, another positive note that Today, they got their price target raised from $24 up to $50 by H.C. Wainwright. And so they're seeing the value of this company. And so I'm with them. I think this stock is a $50 stock. And so I'm going to hold my positions till I get to a solid profitable area up in the $45, $50 range. So anything you can get 30 or below, I would say is a good opportunity to get into this company, even up to the mid 30s. But, you want to get it as cheap as you can get it so you can make as much as you can make. So that's it for CleanSpark. Next, let's touch on our old buddies TLRY and Afria. So if you didn't know, they had a pretty good run today. TLRY, we'll start with that one. I'm going to talk as these as one pretty much because they're going to merge soon. But TLRY was up 20% on the day. It gave back a couple percent after hours. From the beatdown they had last week, everybody thought they were toast. But if you go out a few months and you can kind of see their growth pattern here, and if you just kind of drew a line straight, kind of the progression they were on, then they're, the $34 to $36 range is about where they should be on that normal pattern right now. That fluke that happened last week was the perfect storm. So if you don't take that into account and you just kind of look at what the progression was doing after they announced the merger, and then they kept going up, they're kind of right in the ballpark. Hopefully some of you guys got a good opportunity buy down when it was below 30. But if not, there's still some opportunity going forward because I see this as a long-term play. Afria as well. If you look at Afria, they had a lot of the same momentum going here. And then they'll soon be one company. So they're going to move in tandem. Afria did bump 30% today. There's very likely that both of these pull back a little bit over the next couple days, and they're trying to find footing, and they'll have some people sell off and take profits. But again, if you believe in the cannabis sector and you believe that the growth it's going to have, TLRY and Afria, which is soon to all just be TLRY, they're going to be the leader in that, right? I think TLRY is an easy money play here. But, I would look at it more from the long term from my own perspective of what I think that this sector is going to do over the next 6 to 18 months. So that's kind of my take on that. It's still in a good buying situation for both of them. Some people recommend buying Afria over TLRY. It's kind of up to you at this point. But you will, whenever they do the merger, every share of Afria, I think you'll get like 0.85 shares of TLRY. So I'm pretty sure they'll try to balance it as much as they can by the time the merger happens. But either one of those is a good play. Last up, let's stop on CCIV. Oh, yeah. This baby ran today, and it didn't even have an official merger announcement. This stock's crazy. You guys are crazy, but that's okay. Hey, whatever it is, let's all make money together. I'm cool with it. So if you look at CCIV here, this dude's been on a tear for the last month since the rumor started about them merging with Lucid Motors. And that's when the onslaught began of just run up and then a slight pullback and then run up some more. It ran flat for a few days here, a few weeks. And then, this morning, or the end of last week, whenever it got more apparent that this was probably going to happen, and the stuff was floating around on I can't remember which platform it was, but you could see where it was kind of at least moving forward a little bit. They popped up to 41 on Friday before cooling back off. I think it closed at 40. But anyways, on that video, the last video I posted, I said this stock, I expected a little bit of a pullback today, which it did. In pre-market, it got down to $37 a share. And then, throughout the morning here, it kind of bounced around that $37, $39 mark. And then, bam, that joker shot up to highs of $55 before finally cooling off after hours about $52 a share. So, great day there. That joker was up 30% on the day. So when I first saw it starting to spike, I was like, oh, they announced the merger. They didn't announce a merger. But what happened is a source did say that they came out with a valuation of $12 billion on Lucid Motors. and that they were basically trying to ink the deal. They were working out the fine details. So fairly confident, again, just like I said the other day, I'm fairly confident this merger is going to happen. I did say I thought it would go up 20 to 40% upon announcement of the merger. Today it went up 30, but no merger announcement. So, this dude could run another 30, 40, 50%, 60%. Who knows at this point? It's however far you guys want to take it. Once the merger is announced, because everybody's looking for that competitor to Tesla, and they think that Lucid Motors is it. And so if you want to see more information on the company and some of the specifics, check out that video of mine from the other day. But anyways, I still think this one is going to be a good play going forward. I would not buy it immediately. I would wait to see if there's a pullback in the market, pre-market, and then kind of see where it goes. Hopefully some people will take some profits and give some opportunities for people to get back in. With the run up, I don't know how far it's going to run, but I would anticipate that the retail investors are going to keep pushing it. So find you a good entry point if you're interested in it, and then enjoy the ride. So, okay, guys, so that's pretty much it for today. I just wanted to cover those top 5 stocks that I would buy now or add to your watch list and evaluate. Do some more due diligence. Again, I'm not a financial advisor. This is just for entertainment purposes only. I just wanted to give you my thoughts on those 5 and kind of where I see them going. I think all 5 are solid companies going forward with a lot of upside and a lot of opportunity. But they're also going to have some really volatile and risky times. So take that into account as you trade these stocks or evaluate them at least. And if you like this video, go ahead and drop a like, subscribe to my channel, click that notification bell for more videos like this. And until next time, have a great day and God bless.